Hi investors, Joe here. It is time for part 2 of my Q&A session with my Patreon members. I am a professional full-time trader with 28 years of investing experience, and we are going to look at some specific charts today and some specific trades. I'm also going to talk about pullbacks. Please remember though that I'm not a licensed financial manager. This is not investment advice. I'm just merely sharing my opinion for educational purposes. And if you want to ask me a question, please consider joining my Patreon. There's a link in the description below. There is a 7-day free trial, and while you're down there, please check out my partner Seeking Alpha Premium, the #1 website for fundamental analysis. Who says it's #1? I just made that up, but it's really good. I've had it for 20 years or so. So first of all, let's talk about pullbacks. I think I said pullbacks, but what I meant was pullback buys. Well, one of my Patreon members says, Sod says, "Hi Joe, I'm wondering about Mark Minervini's pullback. What Mark Minervini's pullback buy looks like. I know he always talks about having all trends going up. I think by that you mean moving averages. How does that work in practice? Where would the buy point for a pullback be set? At the previous day's higher high? In general, yeah. Do we look for anything specific in volume? The bigger, the better. Let's look at, I have 4 really good looking pullback charts right now. It's not Mark Minervini's pullback buy. A pullback buy is something that people have been doing for many decades. Minervini does do them and talk about them a lot. I was a member of Minervini's MPA for almost 3 years, and I did see him do quite a few pullback buys, but they're all different. However, the basic principle is the same. So here is AIT. First, let's look at one from the past, and then we'll look at a few going on right now. Here is Costco. Perhaps you are familiar with it. And back in fall of 2023, when the market was weak, Costco made this flat base here for multiple months, broke out for 1, 2, 3, 4 days, made a little abandoned baby here. That's a Japanese candlestick pattern, pulled back for 2 days, and then popped back up above this little pivot area. So the adventurous could have added right here. I don't know if you can see this on your screen. The less adventurous could have added the next day, actually the 3rd day, when it cleared this big gap down. The thing is there's a real artistry. Basically, I don't know, 50 or 60% of stocks pull back. Oftentimes it's because of market conditions. You get a bunch of stocks that break out, and then the market softens for a few days, and that pulls back all of the recent breakouts. That's what most commonly causes pullbacks, in my opinion. If you see a bunch of stocks breaking out and extending, and one that's pulling back and then breaking out again, that's probably a weaker issue. I'm not afraid to do pullback buys like right now, when a whole bunch of stocks broke down during the market weakness. But like I said, the strongest stocks just go up and out with no pullback. I was just looking at NVIDIA. Here's NVIDIA at January 2024, up and out, no pullback, but the market was stronger then. So what else can we say? So here's a typical pullback. All right, you got a prior uptrend, you've got a base. In this case, this is kind of a malformed double bottom. You really want this piece to undercut the first part of the W. And then you have a blast out breakout. And this didn't make much of a handle here. When it doesn't make a handle, it often will pull back or make what's called a cap on top of the pattern. So we've got a rocket ship breakout. You want volume to be higher, but you can't have everything. There's always something to complain about. Then we get a little stalling action, comes back in, and then right here at the lip line, here I can draw this for you. Here's our lip line, okay. Right there at the lip line, it bounces like a tennis ball somewhat convincing, more convincing, very convincing. So in this case, I would have pulled the trigger right when it cleared the top of the bar that touches the pullback pivot area, but it's an art, right? And the more you cheat on your entry, the better cost basis you have, but the less likely a confirmation. It's a toss-up. Now, what do you want to see with volume? You want to see a big volume bounce. You want to see a big volume breakout, a lower volume pullback, and a big volume pullback bounce. In this case, volume was not particularly impressive, but it did go up for 1, 2, 3, like 6 days in a row, 5 days in a row. And then the third down day was the highest volume, and that was actually some accumulation. So that's AIT. This is actually, would be willing to make a play at this one today. ALLY, a whole bunch of the banking stocks which should benefit from interest rate cuts broke out a handful of days ago, and they all pulled back, and now many of them are bouncing today. So here we go again. We've got this is Ally, ALLY. You've got kind of an ascending base here. This is not as ideal as some of the other patterns, like the good old cup with handle. So we have got a pretty powerful breakout with some breakout gaps here. A little bit elevated volume, not amazing, but definitely elevated. And then it comes back in for a few days. Sell volume was high. That is not what we want, although this particular, the first pullback day, we did see some accumulation. Little spinning top doji here, and then a nice pop today. So again, I would buy it above this red candle. Now it has come off a little bit. You know, one thing you can do if you're not convinced about pullback buy is wait until halfway through the day or even the end of the day. I often do that with pullback buys. Make sure it's not a head fake. Here is another one, BTSG. This is a new IPO, and here we have a nice breakout, pretty good volume, pops back in for a few days, and now tennis ball action to almost an all-time high. I'd like to see this extend just a little bit. Yeah, I'm not completely convinced on this one. This right side is also wedged up just a little bit. I'm probably going to pass on that one for now. Ingersoll Rand. This one's looking good. Nice, quiet, prior uptrend. Wild and woolly, but shallow. A multi-month base. And then we got a nice breakout. Good breakout volume. The volume coming in was lower. And then we got this pop. So the day to buy it would have been yesterday, which would have been Monday. And now it is extending. And now it's a little bit extended. I would wait on this one. Now it's too extended. Those are, as far as how far it pulls back, ideally you want it to pull back not even to the lip line. Secondly, to the lip line. Third would be to the 21-day, and fourth would be to the 50-day. Oh, but yeah, like Minervini says, you want all of the moving averages in order. 21-day above the 50-day, above the 200-day, like you see here. Sometimes the pullback will come all the way down to this 50-day, and the stock ultimately will still work just fine, especially if it is a weak market. I wanted to show you IWM. So in this case, this is the Russell 2000 ETF. In this case, it appears to be getting a nice pullback bounce today. The general natural reaction is 3 or 4 days. So you've got a breakout to a new uptrend, and then you get a 3 to 4 day natural reaction, and then you should get a bounce. And sure enough, there's our bounce. So certainly this was buyable earlier today, right here, like 221. More aggressively, you could have bought it yesterday. And then personally, I do a real tight stop Let's just look. This would be, let's say we bought it right here. That would only be a 3% stop. You could do 3% on half, and you could do the other half down here beneath the lip line at like 2.077% or so. Those are my thoughts on pullback buys. Hope that helps. Like I said, it's really an art, not an objective science. There aren't really black and white rules. Okay, so then Saad talked about hood and whether could this be a pullback buy? This looks like the last month or so of trading. Let's just look at that on stock charts. It'll be easier to interpret. So, sort of. I mean, technically, yeah, you got a little breakout from this pocket pivot, pullback here, nice breakout volume, quieter volume coming in, nice bounce volume, but it did fade both days. It's coming into this supply here, and also, you know, this is kind of our secondary breakout down here. It was 20% extended, and really our pattern is way down here. So you are looking at, you're 80% above kind of what I would call the primary base. So it's looking a little tired. This is a stock I would love to be in. I personally probably wouldn't buy it up here. It's looking more like an extended stock to me. And then the other one was, oh yeah, he wanted me to look at PEPG. I actually talked to him about this one, and that is, he bought it on what looked out like a breakout here on July 18th, and it was set up pretty well. Had a strong up day, printed this demand hammer, but this is a really low float stock. Look, it's almost the end of the day, only 20,000 shares have traded. These low float stocks generally there are not institutions in them, or not many, and so a lot of times you'll see a breakout at the open and then a quick fade as the more more ingenious investors swing trade and sell into those breakouts. Or if they're, you know, the institutions like to buy value, so maybe the institutions were buying down here or down here, and then they sell into those breakouts. So I don't trust breakouts in little tiny low float small caps like this. So I would wait till the end of the day for this thing to close about above 18.5. When it does, then there's a good chance it's going to work. You got a pretty nice prior uptrend. You got a cup. You got a handle, although the handle's looking a little bit long, starting to look like a base on base. Conversely, if you have a large cap that's set up really nice and then breaks out, you know, to break out a large cap takes millions and millions of shares. That's the institutions pushing those things up. So I will buy large caps on breakouts for sure. Okay, let's see. Jose bought a stock in the Swedish market, 𝐓-𝐸. I just looked it up. I can't pull that up on stock charts. You're on your own on that one. Let's see. Planning to sell 50% at 1 times risk, move my stop loss to break even, and then let the remaining 50% free roll. Yeah, or say, I don't know. I'd have to look at it. But we can talk about CrowdStrike. Let's just read this here. Trapped in one of my worst trades in a long time. Been there. CRWD. You are not alone. A bunch of people got trapped in CrowdStrike. Bought on Monday the 8th at 396. Okay, so you bought CrowdStrike on July 8th right here at 396. Previous bar was 392. So you bought off of a pretty decent pivot point. Actually, you bought above all of this. So essentially, you bought a breakout. In hindsight, you know, it's squatted, but of course you didn't know that at the time. We can't blame you for that. I would say, however, though, 400, these big round numbers, we often see resistance. 300, where's 200? 200, see how we get resistance at these whole numbers? Personally, I probably, now it's easy to say this in hindsight, I probably would have held off until it got above 400 or set up closer to 400. But a decent buy nonetheless, and volume had dried up, so I certainly can't fault your what you're buying. Now, as far as, without even looking at what you said here, this little essentially a cup with high handle, right? So this little platform broke down. Here's 8%. So I would have been out of here on this day, July 10th. I would have sold when it undercut this, what do you want to call it? High tight handle here. I would have been out on July 10th. Now let's see what you said here. Okay, one of those failed breakouts I mentioned. I've let the stock go down without selling, believing this was just a small correction, that it was going to bounce at 367. So you have to be disciplined and follow and adhere to your stops. There's no reason to have stops if you don't adhere to them. Set your stops and then set a hard stop and let the computer trigger it, or when that alert goes off, execute the trade. And if it is above the alert price, then set a hard stop at that alert price. Oftentimes it'll trigger momentarily. Now down 14%, price just bounced at the 100 EMA. You thought it was going to bounce at 367. Yeah, you were hoping it would get gap support, and it probably would have, but you know, these large cap tech companies sold off so hard, but it probably would have held this trend line. See this trend line right here? It probably would have held that trend line, and it tried to until it had that terrible software update glitch. Let's see. Price just bounced at the 100-day EMA, where there's also a strong horizontal support. I don't do the 100-day EMA. Yeah, what? I'm not sure what day you were writing this. Sorry. If it doesn't get back to my entry level, it might take some time. No, it was very stupid to let this happen. What would you do? So I'll tell you what Minervini tells people and what I adhere to. When you realize you've made a mistake, correct it immediately. In this case, you realize you made a mistake in not adhering to your sell stop. I would sell it as soon as you realize that. And I think you told me later that you got stopped out, or I think you sold it at 300. Yeah, look, here's what 𝗕𝐂𝐽 said. You already made mistake one by not selling at your stop loss. Don't make a second mistake by holding it. Just sell it. Yeah, right. Closed it at an 8R loss. So, yeah, I don't think I need to say anything more about that. Call it tuition, right? Learning experience. Now, we did get a spinning top doji today. Got all of this high volume selling here. This is probably a no-go for me for a long time. If it had, we got kind of a bounce off the 200-day. If it had started to tennis ball off of here, then I would have maybe given it a try here. But I'm not a value investor, so I'm going to probably wait several weeks, if not longer, for this to form up, make a new base. It's a good company. You know, a few weeks or months from now, it'll probably be buyable again. Okay, 𝗕𝐂𝐽 has a plethora for recent buys. Comment on my 4 recent buys: ARM, ZETA, CRS, and Palantir. Let's take a look here. Let me pull up these charts. All right, let's see. ARM, recent IPO, semiconductor stock. They design semiconductors for Apple and NVIDIA. Fundamentally, it's a great stock. You bought it on 7/5. So July 5. Yeah, I see what you did there. I think that was before the announcement on inflation's coming down, when the semiconductors were hot. So I would be okay. I'm definitely okay with that buy. Here is our cup, right? It didn't really give us much of a cheat. Here's our cheat right here. Maybe add a little bit right there. Breakout, pullback by bounce. So you know what I like a lot better is this buy right here, and then this pullback buy bounce right here. This buy here, it's a little bit extended off of the 21-day, and you're coming into this supply. It did work momentarily and then gap down with the last of the large caps. Got support at the lip line, and it's trying to fill this gap. This looks like a hold to me. If you are still in it, it might meander for a while now. This might be dead money for a few weeks as it clears this supply. But if you are still in it, let's see. Let's say you bought it right there. Ooh, that's 15%. I would be out. I would have been stopped out right there. If you are still in it, I probably would continue holding now. At least until it undercut 160. You can make a case for holding it down here all the way to 152. Depends on your position. The bigger the position, the tighter stop you need to do. ZETA, yeah, boy, this thing has just exploded. Nice work on this one. ZETA bought at 715. Oh, he commented on ARM. I like the strong RS. Maybe the base was too short. I got stopped out on 718. Yeah, sure enough, got stopped out on 718. But that's what you have to do, right? Even though it's now above your stop price, you have to control risk. Okay, now ZETA Global Holdings Tech Stock wanted to buy it on 712 right there. Since it was strong, bought it last Monday. When would that be? Doggone it. Okay, so he bought it on the 15th. Yeah, the 12th definitely was a better buy. This is, let's look at the 5 here. Hold on a second. Yeah, okay, so here's this huge primary base. So this is, you're working off the second base here. Strange little, decent base. Definitely not William O'Neill base. Here's our ideal. In hindsight, you want to get in on this saucer. See these demand hammers? Buy it right here. Buy it right here. Buy it right here. In any case, yeah, I would have been comfortable. You got this nice buy volume here and this nice buy volume here. I would have been comfortable doing a half position there and filling the position the next day. So yeah, 712 is better. Yeah, I think it's just fine. Definitely unorthodox. You could have done a staggered stop. You could have done a really tight staggered stop on half, and then the other half way down here at like 12% beneath the 50-day. This is running really nicely now. It is up 30%. So if you are swing trading, this would be a time to take some off. If you're position trading, you probably want to just hold it until it breaks the 50-day unless it starts acting abnormally. CRS. Kind of same as ZETA. While the market was weak, it was breaking out. Yeah, that's one thing you look for. Think it'll run when the correction is over. CRS bought 715. Is that 715? Yeah, definitely working. I mean, these bases are far from ideal. You want to try to get in on these longer primary bases. The longer the base, the wider the space. This is your second base on the 1 year. And looking at the weekly, I mean, it's definitely really extended. So this would be one I would probably try to swing trade for 10 to 20% and get the heck out of Dodge. Now, if the fundamentals are great, maybe you hold on to a piece. In hindsight, here's our flat saucer base. Maybe you start your position right there. 1/2. Add a little bit right there. Add a little bit right there. See that demand hammer queuing us off? You can also buy in the first touch of the 50-day, first bounce of the 50-day, which would have been right here, June 17th. Or in hindsight, so easy in hindsight, right? June 26th right here. You bought it on 715. I mean, it's working. Personally, I would not have bought this. It's just a very small cup with handle, and you are extended 60% off of the main base without a real cup, without a real a decent second base. So I wouldn't have done it, but it definitely is working. And now you got this nice little platform to trade off of. So yeah, maybe take a little bit off when you get ahead here, and then just play for until it breaks beneath, closes beneath the 50-day. See how it's getting support. Wait for it to close. Don't close on an intraday. Palantir. There's so many eyeballs on Palantir. I'm always skeptical of this thing. It has been running the last couple years though. Maybe my skepticism is unwarranted. Bought at 719. I would typically not buy that since there's no real buy point. But it was just keep going up while the market is going down. I could not resist about it. You know, I saw Minervini do that a few times in 2022 where the whole market was going down, and there was a particular stock that was just grinding in an uptrend, and he just, like you said, he just was buying strength. So I think that might be okay. Now let's see, 719. 719, probably that right there. No. 719. It's okay. It's okay. Here's our base. One thing I don't like about Palantir is you want a nice stable prior uptrend, and this is anything but stable. Let me see if I can find an example. Okay, here's EME. Much of the uptrend has dropped off the chart, but look at this prior uptrend. See how stable that is? And it makes a nice long base, breaks out. When you have a stable prior uptrend, you're more likely to have a stable second uptrend. So I really don't like that about Palantir. And then, like many large caps, you didn't get, is it a large cap? You didn't get really much of a cheat area. And then instead of making a cap, it's just wedging up. It's working, but there really hasn't been an opportunity to shake anyone out. So I don't really like that buy there, honestly. Hopefully it works. You know, any stock can go up at any time. What I'd like to see happen is a nasty little shakeout down to the 21-day, and then a resumption of the uptrend. Then I will be more interested. All right, guys, that is it for the Patreon questions. You might want to go back and watch part 1 that I put out yesterday. They were more general questions on strategy and trading, my trading schedule and so forth. If you want to ask me a question, please consider joining Patreon, my Patreon 7-day free trial, and check out Seeking Alpha. Let's see what Seeking Alpha is saying about Palantir these days. Oh, and I want to see Alphabet beats. All right, hold on. Alphabet slightly lower, and has Tesla's earnings come out yet? Ooh, down -4. That's disappointing. Tesla falls as investors eye slow margin recovery. We'll have to take a look at that. So with Seeking Alpha, you get all the news, you get analysis articles, you can look at the financials here, you can look at valuation, you can look at transcripts. Check it out. There's a link in the description. I'm going to get out of here and then read about the Google and Tesla earnings. I will see you guys later.